Hello traders, Cory Mitchell here with TradeThatSwing.com, and this is your swing trading stock market outlook for the week of April 7th. Kind of a crazy week out there, had some big drops, but overall doesn't really matter. We look at the market health indicators, we assess whether we want to be in the market or not. The health indicators have not been good for quite a bit of time, so no reason to have a lot invested, and now it's just wait till they get better. So, there's a lot of talk about when we're going to bottom, how far we're going to drop, all that stuff. Who cares? That's just noise. You just wait for conditions to improve. Once they do, start buying again. Doesn't have to be more complicated than that. There are some watch lists. Mostly would be looking at the short list in terms of the best swing trading stocks list has strong stocks and weak stocks. Would be more looking at weak stocks for shorts. Going long, not really something I'd be interested in right now. The reason is everything's in a downtrend. So these are weekly charts. So we were holding in this range. This was quite a range for a while. We have broken out of it. The first initial bounce up rejected. Same with on the NASDAQ. Drop, bounced up, tried to get back up into that old range, rejected. NYSE composite was holding in that range, had a huge breakout last week. Russell 2000 erasing almost 2 years of gains back to kind of the 2023 levels. The Canadian index, also same range, had developed, is broken below and has not moved back up. So this, downtrends, I just wanted to show the bigger picture. The last kind of bear market we had was 2022. So this is showing basically what the bottoming process and then the rally up. So all these indices, bottoming process and then the rally up. We're chewing into quite a bit of a 2-year bull market after that 2022 bear market. Bitcoin, you can see, I wanted to show a bit more perspective. This is a weekly chart, so you have a kind of consolidation there. Notice the boxes moving up. Then you have a big box here, breaks down, got rejected. So for the first time in a long time, and this isn't recent, this broke down quite a while ago and we haven't been in Bitcoin for some time. Box is moving lower. So no longer uptrend. That's, we want to start seeing boxes move up again. Same with all these other indices. Once you see some bottoming consolidations take place, then if we start moving up, that's better. That's more of a time to start looking at potential longs once we have those boxes moving up. Gold had been doing well. Really big sell-off on Friday. These are daily charts because, just mainly looking at this last part of the trend here. Gold stocks had also been moving really well, and big sell-off Friday. After a huge drop like that, I forget who it was. I think it was Elder in one of his books said, when a man falls down the stairs a long way, he's usually not super quick to get up. And that can work with the markets too. So I would say there's no reason for me, even though we're still technically in an uptrend here, there's no real reason for me to jump in. Sure, we could spike back higher, but generally I would want to see some, chopping around a bit of, the selling to slow. And then if we start moving back up, maybe I'd consider it. But this was a really big, swift, hard tumble. So I'm okay to not even consider that sector or that industry for longs right now. I'd want to see, let it taper off a little bit and then reassess at least give it a few days. No reason to jump in right now. See what happens. These are the market health indicators. So S&P 500 chart here. You can see the waterfall sell-off. Huge volume coming in on those days. This is rate of change, or simply the percentage daily movement of the S&P 500. 2% down days are a major red flag. We had two almost 5% sell-offs. Friday was more than 5%, as you can see there. And Thursday was just under 4%, or sorry, just under 5% drop. So huge down days. No reason to jump in. You know, I see people saying, you know, climax sell-off, jump in. If it is, there'll be plenty of time to get in if a rally ensues. These always tell me, hey, if there's a more than a 2% drop, you're taking a couple days off from longs at least until, and in this case for swing trading, we'd want to see all these health indicators improve. So yeah, no rush to get in. Advanced decline line, still a bit of a weird one. You can see like these lows, which corresponded to these lows on the S&P 500. The S&P 500 is way below those, and the advanced decline line is just getting to that. So in a way, it's kind of holding up, but we've also seen lower swing lows, lower swing highs, selling off or dropping recently. So it's weak short term. There's this little bit of a positive divergence over the longer term, but it wouldn't be a reason to jump in front of this freight train at the moment. Upside volume versus total volume. So what that means is if it's super low, like down here, that means there was only, so on Friday, the way I have it calculated here, only 9% upside volume, which means out of all the volume that occurred, only 9% of that total volume occurred in stocks that moved to the upside. So that says, you know, almost all the volume occurred in things that were dropping, and that's not good. So 10% or less upside volume is not a good sign. And those are the levels I watch for, 10% or 90%. 90% would be almost all the volume occurred in stocks moving to the upside, showing, you know, a lot of volume going into stocks moving up. That's what we want to see for potential bottoms and things like that. But 10% downside days are just indicative of downtrends. Percentage of stocks above their 50-day moving average. Only 11% of S&P 500 stocks are above their 50-day moving average. Only 9% of all U.S. stocks are above their 50-day moving average. I have seen some posts recently on, you know, if it gets to 9%, that's a huge buy signal. I would caution against that. I would wait to see a, you know, some bullish price action, start to see these moving up back toward the 50, these other ones to stabilize and get better. The reason is sometimes these spike very early in the down, they spike to the downside very early. They get almost to 0, to 1, to 2. That means only like 1 or 2% of stocks are in uptrends, yet that could be just the first. If you go back in history and look, that can just be the first flush. Then you might have a little rally, and then it continues. The price action continues to drop, and the percentage of stocks above their 50-day just continues to ride a super low level. So simply because so few stocks are above their 50-day moving average is not a reason to buy. You need, you know, maybe if you're a, you know, long-term investor and you're saying, hey, like, you know what, we've dropped a lot, I'll buy some stocks and hold them for 10 years, you know, whatever. You can do what you want. But in terms of swing trading, this thing's dropping. There's the percentage of stocks above their 50-day moving average is not predictive of what will happen, in my opinion. All I've found is that when more stocks are moving up than not, it is easier to make money. So when we're above the 50 line and more than 50% of stocks are moving up, it's easier to make money on the long side, like periods like this. When you're hovering the line, in this case, you know, the price, the S&P did move up, but a lot of stocks, that means a lot of stocks were kind of flatlining. Some are moving up, some moving down. Not as easy of market conditions here, you know, more above it, more of an uptrending period. Here you can see right in the line and it's flat. yeah, it's just the more stocks that are moving up, the easier it is to make money. And right now, almost nothing's moving up. So just because this indicator is low, I would caution against the people who are saying that is a big buy signal. Yes, eventually it will be a buy signal because the percentage of stocks will be low when the market bottoms, and then it'll go up and they'll all cheer and say, look I was right, it got to 0 or it got to 5 and I bought. But the problem is you can be way too early if you do that, simply by looking and saying it's at 9, it's too low, I'm going to buy now. That does not mean the market's going to go up. It will eventually, because there is a long-term uptrend in the stock market, but timing is important, and I would rather buy once things start to improve and the bottom's more likely to be in, whereas right now the evidence is not there to suggest a bottom is in. And I don't predict bottoms in advance. I just let them play out because I'm not involved. And then once things start to improve, then that's when I say, okay, things are improving, a bottom is likely in. I'll be in a little bit later, who knows, if we bottom down here and the price starts bouncing up, I'll be in sometime later, and that's fine because you have all this to take advantage of after, because bull markets tend to last for quite a while after there's a big decline. Sectors on the move, well, we don't really need to look at this because we already know nothing's doing well right now. There's no reason to buy, so don't need to really hone in on any sectors. If you were going to go short, you could look at some of the sectors that are weak. What I'm doing right now, well, just enjoying the volatility by day trading. No longs in stocks, even gold. Still an uptrend, but I'm giving that a break just after that huge sell-off. No reason to jump in. And, see if some setups form after that big drop. See how, if things level off. Bitcoin's still dead to me. It's, still below the old box. We haven't seen any building to the upside yet. So until I start to see that, it's also dead to me. So, yeah, pretty much it's going to be quiet except for some day trading. And yeah, just enjoy all the chatter out there, and just remember, keep it simple. Until health indicators improve, there's nothing to be gained by trying to predict when the bottom will occur, at what price. That's just all noise and ego posturing. So wait till the health indicators improve and take advantage of the buying opportunities that are going to come out of this.